a bit of a holiday live stream this evening. So I'll be honest with all of you. I haven't really been keeping up with the news too much over the holidays. I've been kind of focused on savoring those things that, money can't buy. But here we are. It is Black Friday, and there are some interesting news stories I thought I'd cover with all of you today. I'm just kind of getting back into the swing of things following the Thanksgiving holiday. I hope all of you had a fantastic Thanksgiving. Do me a favor. I'm kind of having some weird technical stuff with the live streams lately. Put a one in the chat if you can hear me. That also helps fire up the algorithm. So anything you do, like the video, subscribe, participate in the chat. That's all very helpful. Now, like I said, there's a number of stories I'd like to go over today. The one that you might have clicked on, China discovering a massive gold deposit. I guess we can start with that one. Kind of out of the bunch of things, maybe perhaps the most interesting, the most likely to get someone to click in. It's funny, thumbnails with Xi are always very popular. Also with Putin, they seem to really attract the clicks. But here's the story, and this actually could be a game changer in the gold market. So it's definitely of interest, especially from the geopolitical standpoint. So this is from livescience.com. Super giant gold deposit discovered in China is one of the largest on Earth and is worth more than $80 billion. So, according to some Chinese geologists in the northeast Hunan province, the Geological Bureau of Hunan province has announced that they have found gold veins, 40 gold veins, with 300 metric tons of the metal. So it could potentially wind up being the biggest gold deposit on Earth. Now, the thing about this is, they don't really find a lot of these mega gold deposits anymore. Typically, they've already found all of these, or the best of the bunch. And the ones that they're finding, exploration kind of slows down the more you look, because you've kind of already got the low-hanging fruit. So, excuse me, this is definitely a big news item for China. And, as far as the move towards gold as a monetary metal that we've witnessed over the past several years, with nations from the global south increasing their gold holdings, central banks buying gold at the fastest pace in decades, or even on record, really. This plays into that whole narrative in a very interesting way, because China is already the world's number one gold producer. They are the biggest producer of gold worldwide, and that, in part, is why they would like the world to monetize gold once again. Now, the other side of that is that, while they want to monetize gold, they want to demonetize the US dollar. And that's just, the US and China. You ever seen that movie Red Dawn? They say the two biggest kids on the block eventually got to go toe to toe. I believe that's also the Thucydides trap or whatever, where you have a mature, established empire like the US, and then you've got kind of the up and coming nation that would be China. They butt heads. However you want to describe it, gold will be at the center of this conflict. And we're already, witnessing that with the accumulation, as I mentioned, of gold by the global south, moves by those like, Vladimir Putin and the BRICS nations to attempt to monetize gold. They've talked about a BRICS gold-backed currency. Of course, that isn't going to manifest itself for a while. We know that following the recent BRICS conference. But this deposit is just another piece of ammunition, basically, for China, our geopolitical rival, to control the world's gold supply. And they are the biggest importer, they are the biggest producer, and now they've got maybe the world's largest gold deposit. So what does this do? I mean, it just incentivizes them to pursue a policy of gold monetization. And, I wouldn't worry too much about this causing the gold price to drop. That's always one thing that people speculate about. If you find like a gold asteroid or something that you can mine very effectively, it could bring the price of gold plummeting, because the supply would be enormously expanded. But, they still got to dig all this gold out of the ground. But it does give China just a little bit of an edge. Yeah, Rolf Steiner says the USA strategic Bitcoin reserve. So China now has the world's largest gold deposit. What is the U.S. talking about doing? Building a Bitcoin reserve. So Let me know what you think in the comments about that. That, of course, is straight from Donald Trump, right? He wants to build the Bitcoin reserve, and I'm not saying it's not a good idea to diversify, but you can kind of see the trend here. They've got gold, we're getting Bitcoin. So, put a 2 in the chat if you think that that's a good idea to be building the USA Bitcoin reserve. Put a 3 if you think maybe we should be adding more gold to the reserves instead. But okay, so we've gotten to that news story. Of course, it is Black Friday. If you want to do some stacking, you can check out today's video sponsor, SD Bullion. They've got some really great deals this year. Really, and it's kind of lucky that we had a pullback in the gold and silver price leading up to Black Friday, but definitely check them out. They've got gold bars at spot, 1/10-ounce gold bars, so fractional gold, which typically you have to pay a higher premium for. You can get at spot right now, $379 over spot for Silver Eagles. It's interesting in the chat. Looks like most of you are in favor of gold, not Bitcoin, but opinions are mixed. They've also got junk silver on sale right now. I'm trying to find that deal. Here we go. You can get $25 face value of junk silver, quarters, halves, and dimes mixed for 99 cents over spot. And as you know, if you've been following this channel, junk silver, one of my favorite forms of bullion to stack. The reason being, they don't make it anymore. They haven't made it in 6 decades. So take advantage of the Black Friday sales to get prepared. Speaking of which, I just wanted to talk a bit about getting prepared because there are great deals on gold and silver right now for Black Friday over at SD Bullion. But now's a great time to focus on other areas of preparedness as well, whether that be your beans, bullets, and band-aids, just your basic essentials. I know times are tough. A lot of people are pinched, but if these are things that you're going to be buying anyway, today is a good day to load up if you do have some spare cash on just, the essentials for preparedness. Because one thing that may be ahead in our near future, aside from, looming World War III, which I'm not going to really delve into too much today, but it does appear that that is worsening, is also supply chain disruptions. So we have the looming tariffs ahead of us from the Trump administration. Now, you might have, one feeling about tariffs one way or the other. I think it's, not a bad idea necessarily to tariff things. You can fund your entire government that way, especially if you remove something like the income tax. But there is the possibility that you could see supply chains disrupted. Crusty White Bread says, booze, bullets, and Bic lighters. Well, yeah, you could do worse than that. Those are probably all pretty good inflation hedges. But anything that you might, need to stock up on, now is a good time to do that, definitely, because you can get a big discount on it. And I think that Black Friday is definitely a good prepper holiday. Now, another reason you might want to stock up is because inflation is surging. That's another story that we're going to cover today. From earlier this week, we had the Fed's preferred inflation gauge rising to 2.3% annually, meeting expectations. So that was the PCE, or the Personal Consumption Expenditures Price Index. That is, as they say, the Fed's favorite gauge of inflation, or as CNBC here says, the preferred inflation gauge. Now, why does the Fed prefer that inflation gauge? Well, it's because it's the one that understates the inflation the most. So that gives you an idea as to why they might prefer to use that, because it's the one that greenlights them to produce more easy money and to cut rates more so. But still, nonetheless, despite the fact that this understates inflation, it is now rising. It was 2.1% year over year last month, and now we are at 2.3%. So the Fed is cutting rates. They began cutting back in September, and yet inflation is on the rise. Okay, in the chat here, we've got someone saying something about gold and silver being in a bubble. Yeah, I don't think so, especially silver. I mean, gold, maybe you could make some obscure argument for that, but no, I mean, precious metals right now, we'll get to the charts in a moment. We'll talk about the prices of both gold and silver and what they're doing right now, and we'll do an update on that for the holidays, because, the holidays are always an interesting time in the gold and silver market. It's when the manipulators come out in force, because it's very thin trading, right? People aren't necessarily sitting at their Bloomberg terminals waiting to press buy or sell. I guess the algorithms are out in full force, but human trading is very thin during these times. So it's a great time for the manipulators to affect the price of the precious metals. And we'll look at the charts, and I'll give you an example of that in just a moment. But let's finish up with this inflation story. So, bottom line is inflation is once again on the rise, and 2.3% is a gross understatement of the real annual rate of inflation. Let me know in the chat if you agree with that. I know we're putting a lot of numbers in the chat today, but here's the thing, okay? It is fun to interact with you on the live stream. It's probably my favorite part about doing live streams. You have to hear me, of course, taking breaths and stumbling over my words occasionally. But the fun part is that it's actually live, so we can communicate back and forth. So let me know if you think that the inflation rate is higher than 2.3%, or if you have an example of inflation being, like drastically higher than that. Put that in the chat too, and I'll see if I see the comment. I'll read it out loud because I know myself personally, there's plenty of things that I am buying which are up much more than 2.3% year over year. Someone in the chat here, what did we say? He said, what is hot to chat right now? Well, I'm sorry, what is hot to stack right now? So what is hot to stack right now? I would say, all right, so U.S. Silver Eagles, I haven't stacked these in a while, but they do have them for $3.79 over spot over at SD Bullion, which is very low historically. Over the past several years, we've seen much higher premiums than that. So if you want to go with like kind of the gold standard silver, so to speak, American Silver Eagles are a great deal. They've also got these guys. Actually, they have Morgan dollars on sale, I think, right now in VG quality for $29.99. This is a peace dollar, but same idea. Silver dollars, I don't advocate making them a big part of your stack unless you're just like a silver dollar stacker. You could just maybe focus on those, I guess. I mean, they hold their value well, obviously. That's very demonstrable because they're selling for $30 over at SD Bullion. It's a $1 coin. So what more evidence do you need than that? But junk silver is probably one of my very favorite forms of silver to stack right now. As far as gold goes, and again, we're going to talk about the gold price and the silver price here in just a moment. I'll get to it next. We'll keep you in suspense. We'll look at some charts. But also, they got those 1/10 ounce gold bars at spot. I would just buy one of those. Not financial advice. I don't give financial advice on this channel. But anytime you see gold at spot and it's, in any way, shape, or form a decent looking bullion product, that's not going to be a bad thing to do. And it's fractional. So it's like fractional gold at spot is very much a no-brainer to me. Even if you're stacking other things, like just throw one of those in the cart and get it. I think it's one per customer. So take advantage of that offer. And then, there's always the gold backs. Gold backs, you only need about $5 to stack a piece of gold. And, I mentioned World War III, supply chain disruptions, the potential for economic crises. I'm trying not to make this one too doom and gloom. But we do still, of course, have this going on. $36.1 billion trillion. If only it was 36.1 billion, right? That would make our problems a lot less severe. But no, in fact, it's $36.1 trillion in debt. What are the unfunded liabilities? We've got a huge trade deficit down here, growing debt held by foreign countries. So, we've kind of sold ourselves out in that regard, almost $9 trillion. It's hard not to get into a doom and gloom mindset when you're looking at usdebtclock.org. But you might want to be thinking about things that you can actually use for barter and trade. I mean, that's a kind of a low probability event. But if we do get into such a position, you're going to be really glad that you have some junk silver coins or some gold backs. And, in some ways, the gold backs, which, again, they're worth about $5 now. I think when I started stacking these, they were worth like less than $3. So they've performed very, very well along with the price of gold. Gold backs are actually a currency. And so, they're designed to be used for barter, for trade. They've got all these security features into them. They've got a reverse image. I'm hitting my camera here. Sorry about the poor camera work on this holiday. So they got this reverse image on the back. They got watermarks. They got serial numbers. There's all sorts of things that the goldbacks have built into them, which really make them ideal for confidence to be built into them without having to verify them. You don't need to go down to the coin store and say, is this a real coin? And now, junk silver coins, you might not need to do that with, but there are counterfeits out there. And, coin making as a technology, keep in mind that coin making has been around for thousands and thousands of years. Whereas the technology to create a gold back using like a vacuum deposition product to atomically layer gold in very minute, accurate quantities onto a polymer note is extremely high tech. The machines cost millions of dollars. Oftentimes when I talk about gold backs in videos, I will get comments that people say like, "Oh, you could just counterfeit those easily," and yet my response to that is always, "Please share one example of a convincing gold-backed note," because you can find tons of examples of fake gold coins. I mean, fake uh, silver eagles, fake silver junk silver coins, fake gold coins, fake gold eagles. These things are out there. I mean, there are tons of examples of fake gold bars, fake silver bars, but fake goldbacks I've never actually seen. So actually, if you're watching this and you have found one of those, before you leave the comment about how people counterfeit goldbacks, just post a link to a counterfeit goldback with that, because I don't think they exist. But anyway, so that's a hot thing to stack right now too. And these are something that I just think it's a good idea to maybe have a sleeve of 100 of them in your stack, if nothing else, because it's going to be a lot easier to conduct trade with something like that. If you do end up having to barter, then say with like even a 1/10 ounce gold bar, and 100 of these has what, a tenth of an ounce. So you could have a 1/10 ounce gold bar, or you could have 100 gold backs, and that would be essentially the same thing. And it's going to be a lot easier to conduct any kind of trade or commerce with the more divisible gold backs. Someone asked me in the chat here, are any of your gold backs delaminating? Now, I have heard that that is a problem with some of them. But again, I've never actually seen this occur. That sounds like something that might happen. I mean, they're gold set in a polymer. Maybe if you fold them around and like bend them and treat them really poorly, they might start to delaminate, but no, none of mine are. And I've had some of mine for a very long time. The bulk of them are not from like the first year of issue, but I do have a few, I think, from the first year. And no, they're all in good shape. I mean, I store them properly. You can get a gold-back wallet that stores them vertically like this, and you don't fold them. I mean, yeah, if you crumple them up and stick them into a regular wallet like that holds fiat currency, maybe it might delaminate and break. Yeah, Florida Goldback is out in January. I haven't mentioned that in the video, but Rick Bruce Roche in the chat here says Florida is getting a Goldback, and that is right. The state of Florida will be getting a new Goldback of their own. Someone in the chat says Yankee Stacking has some delaminating. Okay, well, I'll go check out that video. Again, it's possible. I think that, don't quote me on this, but I think that maybe Goldback will replace those for you if you mail them back. I'd heard some hearsay as to that. I'll have to get a confirmation on that. But anyway, it's not a real problem as far as I know. Enough about Goldbacks. I'm sure that we can move on to other topics. But that is a hot thing to stack right now. The Goldbacks, I think, are critical component of your stack just to have some really highly fractional gold. I mean, you have really fractional silver with junk silver. You can have some really fractional gold with goldbacks, especially if you live in the U.S. I mean, maybe if you're outside the U.S., maybe you might look at something else. But in the U.S., there are now, with Florida, what do that be? 6 states, I think, where they have goldbacks, where they are actually like legal tender in the state according to legal tender laws. So, definitely something to think about. Now, let's take a look at some charts here. So it's today's Friday, and earlier this week, during the very thinly traded holiday trading, we did see a bit of a silver smackdown. So here's the chart of silver. You can see it actually, this long upward trend line. I'm going to zoom out a little bit more so you can see this whole thing. This trend line, which goes back to the beginning of this year, really the breakout of silver, we actually penetrated it fairly deeply, but you can see this is a very bullish sign for silver. I think that penetration didn't even last a whole day. So the silver price dropped way below the trend line, not way below, but into the high 29s, which is significant because $30 is sort of a significant psychological price level. And we got the silver price today rallying nicely, back up to 30.62. Someone in the chat here says that they didn't find a major gold deposit in China. They're just using this as a way to justify their unreported purchases. Now, that's an interesting theory from Colony. Yeah, because China, officially, they haven't been buying gold for several months now. The People's Bank of China, of course, they were on like an 18-month rip, and I think it was back in May that they stopped. And officially, they haven't bought any more gold since then. Yeah, so maybe this massive gold deposit that they just found is a way to obfuscate where they got this gold from that they have actually been buying behind the scenes. I'm not sure about that. Sounds like speculation. But hey, your guess is as good as mine. Let me know what you think about that theory in the comments. Let's take a look at gold since we're talking about gold here. And gold's looking pretty good too. Gold is in this long upward trend channel that it's been just ripping higher, hitting new record high after new record high in. for some time now, and you can see it's still in there. It too dipped below the trend line recently, right there, but then boom, rallied right back to it and is going back at it in the green. So again, I think that the setup here for the metals is really quite positive. I mean, you think about what's coming. You got inflation on the rise. We'll go back to some more charts that I want to look at, but um, I'm reading the chat. Some of these things I can't repeat in the video, but they are amusing. All right, so this is the CME FedWatch tool, which gives you the probability of more rate cuts in December. The December meeting of the FOMC, you can see that most market participants are betting on more cuts. They're betting on a cut of the federal funds rate from the current rate of 450 to 475 to the rate of 425 to 450. So you've got inflation on the rise once again, and yet the Fed is more likely than not to cut further. And then look at the forecast for December 2025. So this time next year, and you can see that the majority are betting on a federal funds rate then of 300 to 325. That would be 25 basis point rate cuts between now and then. That's pretty remarkable. Inflation's on the rise, and inflation okay, look, I'm going to use the word inflation here. I'm talking about price inflation. Price inflation may be going higher as a result of tariffs. That might be a temporary thing. I'm not saying tariffs are a bad thing overall for the economy, but that's something that may be in play in the next year. I mean, you think of all the things we buy from China. If all of a sudden they got this big tariff on them, we're not going to start making like Beanie Babies and crappy electronics here in the United States overnight. So that stuff is going to get more expensive. Someone in the chat here says, "Why aren't things collapsing?" I don't understand why things aren't collapsing. Well, I mean, things kind of are collapsing if you haven't been paying attention. We're on the verge of World War III. You got Russia dropping hypersonic weapons into Ukraine. You've got massive inflation. If you're homeless in the U.S. because of inflation, and a record number of people are losing their homes, housing cost is through the roof, cost of living is through the roof. Are things not collapsing if you're in that situation? And also speaking of that, I didn't really talk about it yet, and I don't want to get all, cheesy on the channel here, but it is the holidays, and despite the fact that things are bad and, potentially on the verge of massive economic collapse in World War III and all these things, just objectively, that's my take on it. You got to keep in mind now is still a pretty amazing time to be alive. The fact that I'm talking to all of you right now from a, cell phone is pretty amazing stuff, I think. And I think we should just be thankful for, all the opportunities that we do have in this area. Yeah, it's an interesting time to be alive. I know some people say that can be a curse, living in interesting times, but I, for one, I think it's pretty exciting stuff. And, being armed with information and being aware of what is happening means that even if there's a collapse, a plunge, that can be an opportunity. If you've got precious metals and there's a currency crisis, I mean, get ready to buy stuff at crazy discounts. If you lived in Weimar, Germany in, the early 1920s and you had stocked up on gold and silver, well, I mean, you could buy a whole block of apartment complexes for a very low price. You could buy homes, you could get assets. Like if you understand what's coming and you prepare yourself accordingly, you can not only weather the storm, but you can take advantage of, reversions to the mean, swings to the downside. That is when fortunes are really made, is during economic downturns. You just got to understand that, when you turn on the news and they tell you everything is great and we got the strongest economy in the world. I mean, how many times have you heard that? That's not actually what's going on. And so, behave accordingly. But yeah, the Fed is going to likely be cutting rates significantly next year. The charts for gold and silver are looking pretty bullish. Let's take a look at the dollar index here. So are things collapsing? Those on Social Security are getting a $50 increase in their payments. Yeah, I don't think that, I'm reading the chat again. Sorry, kind of all over the place, but add in that this is $50 is a correction for your yeah okay, sorry, and I know I'm rambling on the live stream, try not to do that, but yeah, I mean, if you get a big increase to your social security, all that that means is that inflation is on the rise, right? Because social security payments are adjusted for inflation. I think there was a hilarious moment with the Biden administration a year or two ago, maybe in 2022, when he tweeted something like, this is the biggest adjustment in Social Security payments on record. And then they put the fact check under that that said, yeah, that's because it's adjusted for inflation, and inflation is at an all-time record high or something like that. I mean, it was a very funny episode in Twitter history, if you ask me, or X, I guess, is the new platform, which you can find me on, by the way, at x.com/stack smarter. And I would suggest if you have X, go over there and follow me. And really, it's a great way to get in touch with me. If you ever, you can always comment on these videos, of course, I appreciate that, but you can contact me on X as well. I do check that regularly. If you have any questions or ideas for videos, if you're a stacker, you want to collaborate, whatever, hit me up on x.com/stack smarter. So this is the chart of the US dollar index. This is an interesting chart, the way it's been playing out. I mean, it's been on this absolute rip, right? Moving very much higher since October, higher, 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 rising from around 100 to over 107. Now it hit this area of major resistance, which you can see goes back a ways if we zoom the chart out. And now it really has begun to correct. The dollar has begun to, I think, lose some of its post-election euphoria. Maybe people realize that, no matter who is elected, when you got $36 trillion in debt, and when in last October, you had to borrow $257 billion to pay the bills. So that was the deficit last October, second highest on record for an October, second only to the COVID pandemic highs. That made people get the idea that the dollar is not going to be doing that great moving forward. And you can see that the dollar has really started to break down from that area of resistance. It did peak out just above it, kind of treaded water, and now it's dropping. This is, of course, in the thinly traded holiday hours, so we'll have to see what happens. But, I think that Forex markets probably do maintain significantly more liquidity than, say, gold or silver over the holidays, because they're the biggest, most liquid markets in the world. But still, dollar index down to 105. And think about this. It's not a perfect correlation between the dollar and gold and silver. In fact, for a while there, you had the dollar index was rising here in October. This is October here. And this is silver, the chart for silver. And silver was also rising. Silver rose to almost $35. But then, it started to break down following the election. And it looks like that may be over, bouncing off of this trend line. But now think about this. I mean, if silver was rising and gold too in October with the dollar index rising there in tandem, now that the dollar index is breaking down, I mean, you can kind of think of gold and silver as another currency, because that's, of course, what the DXY is the measure of the dollar against foreign currencies. But if you think of gold and silver as another currency, they're priced in dollars, then as we see the dollar index break down, which I think is what we're going to continue to witness here, we could see the metals really take off. And I mean, I do think it's possible that hitting this trend line and bouncing, silver may now be about to embark on the next up leg higher. Now, I know during these downtrends, sentiment in the metals tends to diminish, especially against the backdrop of, things like Bitcoin soaring. People get kind of, sour grapes, like, oh, why didn't I buy Bitcoin with my money? Why did I buy silver? Well, look, I mean, the number of ounces you have is still the same. And honestly, you're still up like 30% year over year. So, it doesn't bother me that I bought silver instead of Bitcoin. Maybe I bought a little Bitcoin too. Could have bought more, I guess. But, I don't worry about that at all. But the sentiment is bottomed, I think, in silver. And I'm starting to see people wake up. It's very funny. I mean, you pay attention to social media for a topic like silver. I watch videos on YouTube. I read the comments. I follow a lot of people on X who are discussing this sort of thing. And I kind of, you get a finger on the vibe. And now how much of that is, your own bias is hard to say. But it seems to me that when you see these downturns in silver, you really see a huge decrease in sentiment. I mean, people, lampoon the metals. They say, oh, you got your pet rocks. Why did I buy this stuff? And then during times like this in silver, where you're, hitting $34, the highest price in decades, what you tend to hear is people saying, "Gosh, I wish I had bought more when it was 20 bucks." Or whatever, and they don't want to get in then near the highs. And maybe that's wise. I mean, silver's a volatile market, but like now with silver right down around that long-term trend line and around 30 bucks, which I think is a critical psychological level of support. Now, in my opinion, is the time to be stacking. I mean, again, I don't give financial advice, but I think now is a good time to accumulate some metals, especially if you've kind of been on the fence and, maybe you saw the silver price hit 35 bucks and you thought, gosh, I wish I bought more. Well, here's your chance, right? This is the pullback you've probably been waiting for. So I would say just go ahead and take advantage. Let's see, what else? Oh, this is something I had pulled up, another tab I've got on my tablet here, which I thought you might find interesting. And this is related to goldbacks again. But one thing I hear about goldbacks is the way goldbacks work is there's a fairly high premium on them, right? About 100% over the price of gold. And so thousands of an ounce gold note, typically with bullion, fractional gold products have higher premiums. So that's just how it works out with the goldbacks. But people often cite that as a reason not to buy them. But the thing you got to keep in mind is that the spreads on goldbacks are very tight. So even if you pay like $5 for a goldback, one goldback note, you can go sell it. This is just sold auctions on eBay on the secondary market. There's 5 notes sold for $28.95. Let's see, there's a 10 goldback note sold for $55. I haven't really looked through these ahead of time, but here they've got some auctions, I think. Now, okay, here, this is interesting. This is a 50 goldback note that's sold for $227.55, so less than $5 per goldback. What that tells me is that maybe you want to stick to the one goldback notes, the more divisible ones, rather than the 50s. Not that there's anything wrong with the 50s, I have them, but they do seem to maybe preserve their premium a little less effectively just looking at evidence. But you can see here are some like auctions where people paid $14 for a 1/1000th note. I mean, that's crazy. $13 for a 1/1000th goldback note. Maybe they were old notes or something and people just didn't realize what they were getting there. But yeah, the secondary market is alive and well for goldbacks, so I don't tend to worry too much about their ability to maintain purchasing power over time. Let's see, what else? Okay, I wanted to look at the Bitcoin chart too and do a little analysis of that for you. So Bitcoin, if you've heard me talk about this, you know my view on Bitcoin. I think it's kind of like a lottery ticket. Now, some people don't like that view. They say, don't you know it's the future of money? How can you keep calling it a lottery ticket? Well, it's just how I view it. I mean, it seems to be highly speculative, very volatile. I don't see a lot of use cases for it, and yet I have some because, hey, it's hard to argue with the evidence of what its price has done over the years, right? And like, I don't really buy into the thing that Bitcoin is a tulip bubble, because the thing about the tulip mania is the tulip mania went up once, and then it crashed. It never came back up, right? But Bitcoin over the years has gone up and down and up and down, and it's put in higher highs all along. So, I mean, it's not quite a tulip bulb mania. That argument and an analogy doesn't really seem to hold up when you look at the actual evidence. But one thing that I think people have gotten here is very, very convinced that Bitcoin is going to hit $100,000. And look, the thing that makes me skeptical of that, at least, in this cycle, is that everybody seems convinced that that will in fact be the case. So the contrarian in me just kind of screams like, watch out here, it may not happen, right? If everybody thinks it's already going to happen, who's left to come in and buy to drive the price higher, above 100? That's all. I mean, it's just like everybody seems 100% convinced that that's going to be the case. And here is an alternative scenario that may play out, right? This is just me looking at the chart. So I'm going to turn it sideways here so we can see the whole thing. Yeah. If you go from the lows back here from August, which was right around 50,000, and then you draw a Fibonacci retracement up to the most recent high, which I think was just shy. It was like 99,500. If that's the peak, how far could you expect the Bitcoin price to fall? Now, that would lead you to maybe a 61.8% retracement around the high 60,000s. So, look, I mean, I'm not saying that the bull run in Bitcoin is over. I'm not saying that the uptrend is over or that it has topped, but it is a volatile asset and it is subject to significant corrections, price volatility, price swings. So, I'm not shorting Bitcoin here. I think you'd be a fool to do so. However, I will say this, if I see the price of Bitcoin retrace to around that $70,000 level, I'll probably be buying some more. And I would view that as an entry point. So that is just something to keep an eye on for those of you who are interested in Bitcoin. It's funny. I mean, Bitcoin is a very polarizing thing in the stacker community. It's like on the one hand, you would think gold and silver stackers and Bitcoin enthusiasts kind of have a lot in common, right? They're both alternatives to the fiat currency system that we currently have. There is the fact that, Bitcoin has soared astronomically in price despite the prognostications of the stackers. I mean, myself included, I'm sure I've had negative takes on Bitcoin in the past, but I mean, it's hard to argue with the fact that it has soared. Now, I mean, I would still be skeptical of it as maybe a long-term store of value, but we'll see. I was skeptical of its price ever approaching anything like 100,000, and yet here we are. So, you can be right or you can be rich, as they say. So I think it does make sense to have some exposure to cryptocurrency here, although, I would be pretty hesitant to buy around 100,000. But that's what I wanted to finish up with today. It's been a pretty long live stream. I hope you all have enjoyed taking a little bit of time out of your holidays to cover some of these updates and to stick around with me. Thank you all very much for watching. Lindsay Webb says, who cares about Bitcoin? Who has an 1895 Morgan? Yeah, well, I concur. I mean, my focus is on the metals. They're the real deal. They've been around for thousands of years as money. And yet, it's hard to argue with the price performance of crypto. And crypto has still got a very small market cap, compared to, I think it just recently surpassed the market cap of gold, or of silver rather. And, I mean, we know silver is one of the most absolutely undervalued assets in the world. So if the market cap of cryptocurrency is just slightly more than silver, it still means it's kind of cheap, if you ask me. Yeah, Lucky Papadopoulos says, Bitcoin is fake. Well, yeah, Bitcoin is not money. I don't think it's money. It's a cryptocurrency, only gold and silver money technically, but I'm not trying to trigger people out there, just pointing out that Bitcoin might be right for a pullback here, and if you want to diversify, there's nothing wrong with diversification, right? You can hold gold, you can hold silver, you can hold other tangible assets. I mean, the one thing that we do know is that fiat currency is going to continue to lose value. So being anything outside of crypto, or rather the US dollar and fiat currency, I think is a positive move to diversify out of those. And, I will say this too, there are some things you can do with Bitcoin that you can't do with gold and silver. Of course, you can't really even have Bitcoin without silver because you can't mine it or build any of the electronics. But, if you want to travel with your fiat alternative, taking a bunch of gold and silver with you can be difficult. Whereas with Bitcoin, you can just take a passphrase with you in your head. Now, that might be the only utility it has that is superior to gold and silver, but still, that's a pretty useful one, as long as people still want to buy Bitcoin. So, something to think about. But anyway, thanks for watching, everybody. Stay safe and happy stacking. Do me a favor, smash the like button, subscribe to the channel, leave a comment down below, share the video on social media with all your friends, and I will catch you next time. Smart Silver Stacker, out.